The Early Buffett YouTube channel. I have a little trade idea for you. If you like selling options, you're at the right place. I'm going to take a look at Applovin and show you a little trade idea that I have. So if you like that type of thing, be sure to stick around, and here we go. So Applovin is kind of a facilitator of digital advertising. Won't go too much into the fundamentals of the company. We're just taking a look at the technicals here, and just to give you a little idea. And again, as I always mention on my channel, I'm not a financial advisor. I'm not a broker. I'm not a CMT. I just make these videos here for the trading community. I've been doing this for about 5 or 6 years now. And yeah, so none of this is advice. Please do your own due diligence and all that good stuff. And but if you're interested, then let's take a look. So Applovin's been kind of, range bound for the past, couple months. If you want to pick up some shares a little cheaper, you could possibly sell a put option on it. So obviously, when you sell a put option, you are obliged to buy the shares at the strike price that you selected. So be sure that you want to own Applovin at the strike price, and more specifically 100 shares of Applovin at the strike price. So, if we're looking here currently, 100 shares of Applovin would put you back about $7,700 US. So if you want to get into a position of Applovin and you'd be comfortable with, 100 shares at one of the strike prices that we'll take a look at, then that's the strong word of caution, is that you really want to own the stock when you're selling put options on it. So conversely, when you're selling call options, you want to sell the stock at that, whatever that strike price might be, because you will be obliged to sell that stock at that price, 100 shares specifically. So taking a look at the chart, you can see it kind of bounced off of the 65 level. Down here we have the 200-day moving average, which is around 54 or so. And it was on a run after that, right? So you'll probably get some support around 55. What I'd be looking at is the 60s, actually, the 60 puts, because, you could do any technical analysis that you want, but let's say that we want it at 60. We want to pick it up at 60. Then you open up the options chain. I like to go around 45 days out. Currently the August expiration is around 52 days out. I'll go into the reasoning for that on another educational video. But just for the purposes of this quick video here, I just wanted to show you that if you look at the 60 puts, they're selling around $1.25 each. Well, call it $1.30 or so. You'd probably get filled somewhere around that. Volume is really low on this, so it'd be hard to kind of trade around, but it's still possible. But again, if you want to own the stock and you're looking to acquire shares at $60 a share, which would be, gives you a nice buffer as well, right? Because it's currently at 77. So if you go at 45 days, you have until August, the middle of August, to have that time decay, right? So what happens if it doesn't get down to 60? You keep the cash that you were given. In this case, that cash was $130, call it. So you get about 2% over a 50-ish day time period. Again, I like to do 45 days, but 52 could work as well, so. And yeah, so just an idea there. If you want to sell a put option, you could sell the 60s, which I think would be probably a good place to get into this stock. And yeah, that's kind of all I wanted to show you today. So if you like this type of thing, please let me know. If you don't like it, let me know as well. Any comment is a good comment, in my opinion. So please, do you disagree? Is there a better strike that you'd like? Do you want even more protection? Let me know in the comments, and let's get the conversation started. So thanks so much for listening. If you don't already know, I do a daily recap of B&M Bloomberg's top picks, so be sure to subscribe for that. And until next time, I will see you tomorrow.